Hey everyone, welcome. This is Derek from optionboost.com. Quick look at the markets today. We are up in the higher end of the S&P. If I were to give a level out there, I would say around the 1350 level. If we take a look at the actual index, we see this 1350 level and getting ready to test it. I don't want to give a specific level. I don't necessarily think of specific levels in these terms. I think of them as zones. So what I look for when we get up in these type of zones, when we have a lot of resistance, like anywhere between 1340 to 1370 level, I look for somewhat of a 30-minute change of trend, okay, on a 30-minute chart, and then I start getting taking more defensive posture on the market. So congratulations to those who took my trades from last week. I know the Euro and the McDonald's trades are doing really well. I'm starting to peel out of those, taking profits, and taking on a little more of a defensive posture. Now, one trade that I wanted to show you guys is a trade in Apple, and I'm actually thinking about a short in Apple. Now, let me be clear on that, is that I'm not looking to short right at these levels and stepping front, the freight train that is Apple, that keeps running higher and higher and higher. Okay, I'm going to, focus down to a 30-minute chart. I want to see a solid change of trend and then a break of this level right here that was, it tends to be a gap fill. If you look back on prior earnings announcements, you'll see that you get a nice gap up, okay, on earnings. And then, after earnings, you see Apple kind of retrace. Here's a prime example, and kind of what I'm basing this on here that happened back in July. You see a nice pop, you see a nice run up, and then a reverse, and then you come back down to the moving averages to kind of fill that gap and more. So for this, I'm taking a really defensive posture. You don't want to enter these on any type of put spread. You definitely want to enter these on just a simple put purchase. Okay, you just want to really define your risk and make sure that you're not exposing yourself and exposing your capital to an unlimited risk, basically, in this put spread variety. So any put out of the money around that level, looking out to the February or maybe in the March, maybe at the money puts. Maybe the 455 put would be a good buy. But like I said before, I want to see a change of trend on a 30-minute chart, okay? And I want to see a break of this level before I even think about entering this trade, all right? Now, what I consider a break of this level is a 30-minute candle close below this level is going to get me into the put buy, okay? Now, another thing about Apple is that it's had the implied volatility on Apple at these levels is really low. So we're definitely, as option traders, looking to purchase, and get long volatility, meaning that we want to purchase options that are relatively cheap when they have this type of low implied volatility. Okay, so I hope this helps, and if you have any questions, please visit my website at optionboost.com and contact me, and I will see you guys soon. Thanks a lot.